The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone, on this Tuesday, the 3rd of December. Here we are, right into December, wrapping up the year. Dow's down 80, Dow down 10, Dow's up 40. Wow, that was a quick change. At 96,000. Oh, this is Bitcoin. I was going to say that is. Let me get back to this. IND. We get back to the Dow. The Dow is down 69. That's what I thought. At 44,711, taking a bit of a breather. I suspect that it will get above the high that was made, all-time high that was made 3 sessions ago at 45,760. Oops. 45,871.29. Goes to 0.30. That starts leg C. I suspect that's going to happen quite soon. Looking at the S&P, here we go. Oh, and that'll start leg C. And remember, I'm always looking for that D. D's where we start to consider the downside, but we haven't gotten there yet. Leg C in the S&P down 44 cents to 6,046.79. If it goes above 60, 53.58, and let me just double check that right now. Yep, if it goes above the high of yesterday, which was, 53.58, it goes to 59. That continues leg C. Let's go on to the QQQ. It's the NDX 100 trading vehicle. That's the leg D was made yesterday. Trading quite nicely now. It's come back from being weak. It's up 27 cents. At 515.47, but it needs to get to let me get that right, 516.27 to continue leg D. Very interesting, fascinating, all-time high. And that will also start leg D in the weekly chart. All right, let's get to the IWM. The IWM is the Russell 2000, trading sideways. It's trading 62 cents down at 241.12. Yeah, I'm just watching this closely. I don't want to see this become a dreaded H pattern. I want to see a push, at least to start another move to the upside above 243.69. That says you could start to tackle the 244.98 all-time high that was made 6 sessions ago. It's really important. Let's get to the SMHs. Really important. Are they moving up? Are they moving down? They're moving down, just down 65 cents at 247.20. They had a really nice session yesterday. Actually, for 2 days, they had a good session, Thursday and Friday and yesterday, even though Friday was just a shorter trading day. Now let me get to this because I think it's very important. The gold contract is just sideways. It's not breaking up. It's not breaking down in one of its narrowest trading ranges in quite some time. And that's going to be the clue for gold, because if gold starts to break under, it's at 2661 right now. If it takes out, I'm going to give it a little bit of room. But if it takes out the low of the 26, which was a continuous contract, 2629, they could really start to move down to retest the 2600. So it's really important that it starts very soon to get towards 2700. Let's go to the silver contract. Silver's trading up a little bit, up 36. A little bit better because it hit the 200-period moving average, and now it's trying to push higher from that. But it's really in a sideways trading band. Let's go to the GDX. A lot of people always want to know about the GDX. GDX trading up 56 cents at 37.38. Now, this is going to be important for the GDX because if it takes out the 36.31 200-period exponential moving average, really good chance that it's going to go down quite a bit lower. It needs very quickly to move towards the 38.50 area. All right, let's go to high-grade copper. High-grade copper, looking at that, had a big spike to the upside today. Now it's up at 4.19, up 0.06. This is going to be very important because I want to see high-grade copper. It hasn't done it yet, and I'd like to see it in the next, by Tuesday of next week, within a week. I'd like to see it testing the 200-period moving average of 4.33. And here it is at 4.19. It's been trading in the 4.10, 4.13 area for a little while. Look at this 200-period moving average in the weekly chart. It's just been stuck there. This has been its support level. You don't want to see it go much lower than that. Let's get to did that. TLT. The TLT has had a really nice move. It needs to get to a leg D. It's in a leg C right now. This is the first time, and I said this about a week ago. This is the first period that I'm looking at. I'm looking at the TLT and saying this is an opportunity for the bonds to see higher prices. The yields can come down a little bit. Well, it's trying to do that. It's at the 200-period moving average of 94.21. It's actually trading in 93.95. It did hit 94.03. So this is a really important moment because it's going to help the weekly chart turn up, but it's taking a lot of effort. It won't do that until it trades in the 94.50 to 95.30 area. Then I think you might see the pink 9-period moving average of the weekly chart cross positive. Now let's get to that. I've done the Bitcoin. I'll do Bitcoin again. Bitcoin is trading up 295 and 95,930. And one of the reasons why we've kept our position in the Bitcoin that we've had for a little while, and not really taken little bits, we've taken a little bit off, but not all that much. We're trying to keep as much as possible. Why? Because I think there's going to be, I'm treating the weekly chart of Bitcoin as a peak C that should go to a D above the all-time high, and that high was at 100,105. So if it goes to 106, that starts a leg D. It doesn't have to do that because if you look at the GBTC, the Bitcoin, this is the Bitcoin Investment Trust, its weekly chart has already gone to a D. If you look at the IBIT, that is the Bitcoin, that is the iShares of the Bitcoin, that's gone to a D. So I'm just thinking there's still enough residual upside action because the 9-period moving average is still very strong in the daily charts and the weekly charts, that there should be some residual move to go higher. And I think it's going to coincide with the movement to the upside. Now, I'm also saying to subscribers, I would not be surprised if the upside in the general market, just in the shorter term, is kind of limited. And I'm saying that for 3 reasons. One is we've got to a peak B in the daily chart, and buy modes invariably go to at least a D. So that says there's still room to go to the upside. The S&P is already in C, but it could keep going higher, at least to a D. The QQQ has already made a D, but there's still strength. Look, the 9 is way over the 14. And in the daily chart, MACD is good. Stochastic isn't yet at 80% to 75%, a little bit of a warning. And today we went to a leg D. So we're leg D in the weekly chart. So I still see upside action. The only thing that concerns me a little bit here is that the IWM, which was a failure, then it was a leader, and then it was failing and leading, and now it's not failing, but it's not leading. It's kind of stalling, IWM. I want to see this rectangle formation very quickly push higher. And that's going to be important. I'll be back. We'll look at stocks. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back and we're looking at the E-mini made a peak C minus because it failed. It went right down to the 200 period moving average, went right through it in the 10-minute chart, and now it's trying to treat that as a support level. And I think it's going to work, but to know that it works, you got to see trading at 6,057.50 right now. You really have to be trading sharply above the 200 period moving average in the 1-minute chart above 50.62. And that says you can then target, 60.61 is the 200 period moving average resistance in the 5-minute chart. You got to get into that area and hold. And I would say that either it goes right through or it holds there just for 3, 4, 5 minutes and then pushes higher. Because right now the market's a little weak. And let me just explain something that I was looking at as a possibility today. The possibility was that the S&P somehow either just extended leg C by a little bit or it failed. It just didn't get over 53.58. That's the cash. The Dow, on the other hand, INGU, has already made a peak B and will start to stabilize, and by the end of the day would try to come back, and it's down 84, but it would be down much less by the end of the day. And tomorrow there's a move that takes it to leg C. This is kind of the scenario that I'm looking at. And that allows the QQQ, the NDX 100, to push higher as it did today, and then maybe stall a little bit. So what we're getting is this little rotation, these swings intraday from yesterday into today into tomorrow, and that starts to see the Chapman wave notation go to a C, not very much higher. In fact, at this particular point, I'm thinking that the upside, before we take a breather, might be fairly limited. Yeah, all-time highs, but not a big, fantastic move into the 46,000s, but maybe 45,000, 45,000, 4 to 500, and that gets us to a D, and then we take a breather. Now, the question came in, is that going to be what I'm calling for between an 8 and a 12, or even a 10 or 15% correction coming in between December and January? The timing of that, I've got certain timing models, but I'd rather see my methodology go to those Ds, at least the D in the fourth highest peak in the daily charts, and then start to decipher it. Why? Because it's going to impact the weekly charts as they get there and extend some of them in a leg that's maybe an alternate wave. And also, I wanted to see what happens with the semiconductors. Look, they're holding pretty nicely, and they're not breaking down. They're not breaking up. Individually, you've got advanced micro devices. Had quite a nice session yesterday, giving back a little bit today. I said, someone said, is this the bottom for AMD? No, I don't think it's at all the bottom. I think it's a trading bottom, potential for a bounce, maximum to about 150, the 200-period moving average. Now, I don't even think that. I think more for 145s if it rallies at all. But that's how I'm going through the different individual stocks. Okay, talking about stocks. Let's do this. Apple. Apple right now is trading at an all-time high. It is up $1.06 at 240.65, leg D in the daily chart. Very strong action. Nothing here suggests anything but just a little bit of a breather if there's a pullback. And the weekly chart is a D. See, we're getting all these Ds. Monthly chart is a D. Let's go to Amazon. Of course, you've got the season coming up, the buying season coming up. Amazon's doing okay. It's not an all-time high, but it's real close to 211. All-time high was 215.80. What was that? Did I say 2? No, it has to be right there. Yeah, 250. Oh, was it around? No, 215.90. I remember that. 215.90, and that's going to be important to surpass. 15.90. Okay. There's a cup formation, suggests that it should try to get there. In fact, it should go 1 penny higher, and it should get to at least 215.91 to start a leg D in the weekly chart. So you can see why I'm putting the whole package together, leg D in the monthly chart. Let's go to Amazon. Did I type it in the wrong place? Amazon's where we are. Let's go to Netflix. Netflix trading right now. There again, 908 all-time high, round number all time, and 908.00 at a peak D, trying to get back there. I think it could actually do that. So you've got a G/C in the weekly chart. I would not be surprised if the 908 level is taken out and we get to D. Can you see what I'm looking at right now? Leg D in the monthly chart. Now, I needed to show you something. Should I do it now? I'll try to remember a little later because I've got some questions I need to answer. So that's that. Let's go to Goog. Remember, I go to Goog, not the trading stock because it's the one I've notated. And that one's stalling. It made a double top at 183.79 back in October. It made a double top because it went just a little high at 184.03 in November, and then it dropped sharply to 165, and now it's at 173. This one's struggling a little bit. Okay. Now, I wanted to show you a couple of things. So individually, you've got stocks that have just been absolutely superb. Look at this. Palantir, leg E in the monthly chart. You can't tell me that isn't an overbought chart right there. So remember, the chart doesn't know it's overbought. It just knows that it's trading at a certain price because that's the job of the chart. But we look at it and we say, look at that. It's almost a 1-to-1 to the upside. Palantir Technologies, leg F in the in the weekly chart, leg E on the daily chart, all-time high, fabulous action. And I said that in this particular phase right now, I'm starting to look to see where there are round number highs. And we'll make a note of those. Let's just check Monster. I always say Monster because MSTR, but it's MicroStrategy. MicroStrategy did a 543 round number all-time high back on the 18th, was it? Let me check the date. Yeah, right there. 21st, it went to 543.00. Drops sharply to the 349 area, pops up, and now it's trading in 385, but it's kind of struggling. Okay, interesting. Leg C in the weekly chart. Yeah, is that going to get to a D? I don't know. MicroStrategy. So let's go on to another one that's been kind of hot in the news as for this past month, and that's Tesla. Tesla's trading a triple top, 358.64 back in November, and then later in November it goes to 361.53, a little bit higher, and 361.93. Then it pulls back. Yesterday it went to 360.00, round number high. As I said, remember what we did back in April when we were assessing all these round numbers? And that saw that huge decline in the semiconductors. Well, I'm anticipating that there's a form of that going to happen here, that there's some kind of a pullback coming soon, and I can't say yet whether this is the big one or not. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So we're looking at Tesla. Tesla's making this kind of triple top test. It's just a test. I'm not calling it a triple top. So I just want to clarify because, words mean some things. I didn't want to imply that this looks to me like all the different indices and the key stocks are going to a level where we could have a major turn down. I don't see that right now. I do see that there'll be a rotational correction. If there's a rotational correction, it alleviates and ameliorates downside risk. There will be downside, and it will be selective with the other areas that start to come on. Just wanted to clarify that. And I haven't yet got any signals to say that it's about to happen. I'm just warning my subscribers that from my perspective, it's now becoming a bit of a struggle to keep going higher. The moves are a little bit labored, and actually the way I see it, even though there was a broadening out, because you've got the smaller caps starting to move, and you've got the XLF, which is the financial. This is the biggies, the big financial stocks. This is F, and a possible G right here. I better give it an alternate count. G/C. This is the financials at an all-time high 4 sessions ago. 2 weeks ago, maybe it continued this week to go above the 51.62 high, that all-time high that was made on the 27th. And I've got this as an F/C, so this could even happen next week to go to that D, and a D in the weekly chart. You see what I'm saying? I'm trying with Ds are where that's kind of the objective of a buy signal, upgrade to a buy mode, doesn't matter the time frame. And that's where yellow light just flashes to say, whoops, got to be careful here because you could recycle higher. But that's also where you get your biggest pullback. So, but look at this, KRE. This is the smaller banks. I wouldn't call some of them small. Some of them are really big. Going to a leg D in the monthly chart under the all-time high of 78.81. The most recent high was 70.25 at a peak D in the daily, at a leg E in the weekly chart. And it's saying that in this rotation, they've had their turn to play catch up. Maybe they need another breather, and then they are the leaders for the next big move. This is just my thinking out loud, because we don't know for sure, and I don't even have, other than the fact that this KRE S&P Regional Banking ETF made a high on the November the 26th at 70.25, and 1, 2, 3, 4, 5 sessions, it's just that tiny candles, but lower or red, says this is the moment where you should have a sudden big green candle going above 68. Or if it goes underneath the black 14-period moving average, that green 9-period moving average gets closer to turning down, although it'll really take a move to the 64s, I think, to get that to turn negative. So far, you understand my reasoning. I'm looking at a rotation through the different sectors. Within the sectors, there's a rotation through the different stocks. Look, fabulous example. Look, Microsoft's had a beautiful move to the upside from the 405 level. Here it is at 430. I went to the 433s the other day. Even today, it did 432.47. So this is what I'm saying about rotational corrections. They are very important because looking at the scales of justice, you've got one sector that got tired, and now the other sector is trying to balance this out. And that's really important. Okay, so I'm done with that kind of analysis. I want you to look at some other things I wrote down. So look at this. It's very interesting. The XLC. Always a surprise to me. I hope I've got all my notations there. Yes, I do. Good. This is the XLC is the ETF that really covers communications services select sector, but it is very broad. It's a spider fund. It has Meta. It has Google. It has Netflix. It has Disney. It has Verizon. It has telephone at AT&T. It has T-Mobile. I mean, it is really broad. And I'd say if the folks are cutting the cord, I'd be real careful because at any time you'd find that's the result of cutting the cord. I've been totally wrong. We had this at one point And look what it's done. It's an all-time high as we speak at 99.41. Let me just check. I don't think that's a B. 98 round number high, 98.04, and now it's gone to 99.53. So just for the moment, I'm calling this G/C. Why? Because it's a continuation of the pattern, because the 9-period moving average didn't even get close to the 14, so that shows continuing strength. And at the same time, that peak D could have been a high, and that could be a brand new buy signal to buy mode, so that could be E/A, F/B, G. I'm just being ready. All right? I've got everything there. It doesn't make any difference whether I call it a G or a C. I need to see what happens next, because at this rate, it's outstanding action. And the same thing in the weekly chart, G/C. It doesn't say, oh, so you could be right, but you could be wrong. No, it's got nothing to do with that. The price is way over the 9. 9's over the 4. That's fabulous. The MACD is great, not great like it was before, but it's very good. Here's the gray relative strength, rallying strongly. The stochastic is at 95%. I mean, that's fantastic. The on-balance volume, the blue line, is a little overbought. The weekly chart, fabulous. Look at the stochastic at 94%. Monthly chart, stochastic at 97%. So now it brings me to something that I need to talk about. In 2025, there's no way that I can look at this chart with the stochastic going from July of 2023, a year and a half, almost a year and a half later, still flat in the 97% area, saying invariably the stochastic that goes in this high, like it did back in July of 2021, at some point anticipate that it should pull back. It doesn't have to go down to the single digits, but you've got to be prepared that it's not going to stay in the 97% area. So be prepared that if it all comes together and they all come down, because who knows? I mean, you have to have some economic, something in the economy. It could be geopolitical or the economy that is so impactful that it says, watch out. I don't want to be in the market right now. I'm out. And then there's a vortex and price. I don't see it yet. I'm saying I'm preparing for it at some point. And it could be rotational. It could be that the communication service, that finally telephone, which has been absolutely fantastic. Another kick myself, because we're going to buy it, and I didn't, because I kept thinking cutting the cord. But look at this. It's gone from the teens, under 14, to 23. I mean, that's fabulous. Look at that big spike today. I didn't even see that. Is that an F or is that an A? I'll put an F for now. Wow. And this is G/C in the weekly chart. So you can see there's still a lot of strength out there, rotational strength. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I had not a question, but a sort of a statement here as SECO. Baseball Eyeball says, Basil, I invest in copper through SCCO on a weekly. SSCO is a monster bullish setup with great quality volume since 9/29/24. This bull is just resting and buying time for the next bullish run. Thoughts? Yeah, so I keep my eye on this, as you know, a lot. When I draw in the cup formation and I draw in the Chapman wave inside wedge target repellent line, usually I make it green. This time I did it more as information than anything else, so let me just change this. Usually it'll be green. And it doesn't get there, whether it's the futures, doesn't matter what it is. It fails underneath. I look at that as weakness. And then what I have to do is I get rid of it. I say, wrong. If it's wrong, I don't want to sitting there saying, hey, it's still an influence. No, it's done. It's finished. It did its job. Now I have to look at this pattern and says, watch out for an arch formation, the dreaded H. So I draw it in, and I draw it in like this, and I try to do a time price match. How are we doing for time? I'll just do this real quickly. And I drew that, and I look for that high, and I say, well, that it's already surpassed the number of bars on the upside to the downside. Let me find a particular candle. So that's the candle I'm looking at right there. And I draw this in, and I say, okay, this gives me a sense of the downside risk because the 9-period moving average has turned negative. And it says by December, this is pink, by December, by December, the week of the 27th, so by the end of December, if SSC, Southern Copper, takes out this low right here, the low of the 20th of September of 97.68, it's trading right now at 101.10, you've got to be careful that it doesn't retest that low. But the monthly chart is still very positive. The 9 is over the 14, way over the 14. The MACD is about to turn negative. It hasn't. It's still positive. Stochastic is negative at 65%, and the on-balance volume is negative. But my most important indicator, the 914, is strong. So I'm in agreement with you looking out. You remember we were looking at advanced micro devices yesterday. Well, look at this one. SEC, you see this big pop to the upside? See that pop to the upside? The space between the black 14-period moving average and the pink 9? Look how forceful. It said, I am still very negative. And what happened is it did the dreaded H, took it out and closed above it. That's important. So this is the move. And so far today, it's failing. Went to 102.76, but it's only at 101.15 right now. You want to see a powerful move in December that takes you to 104.70 to maybe 105.60. And that's going to finally get that pink 9-period moving average, trying to get it positive over the 14. The MACD is very close to turning up. The relative strength is holding quite well. The stochastic is flat at 21%. That's negative, and so is the on-balance volume. So you need price to be the arbiter of the trend. At this point, I'm still saying I think that high-grade copper, giving back some of the gains, is just in a basing formation. It mustn't break below 4 in the next month and a half, or let's make it a month. But it's telling us something's not quite right in that whole sector. So you might be right, but I need the evidence. And for me, the evidence would be that SECO actually starts to trade. It can't just hit it once and fail. 104.50. It really has to tag 105 on a weekly basis and start to hold there. Then I think you're in the process of seeing copper move much better. And this is a proxy in many ways for copper, Southern Copper, SECO. Next question came in. Yes, Greg, I did see that, and I'll correct it for tomorrow. We did get stopped out of one position, the KRE. Nice profits, still a gain in that position, but our core position is still looking very good. Yeah, so I might add to it. I might say, you know what, if and I mentioned this morning, I said if the TLT is starting to move up and holds, then you might see the financials start to pull back, because on the big move up in the yields, they've benefited. So there might be a correlation there. Sometimes it isn't, sometimes it is. We'll see. So with that said, a question came in. Okay, I'll get to it. Where was it? Oh, FXI. I always look at that. This is the China large cap. Nothing to see here, folks. Just down in the doldrums at 30.48. At 200-period moving average on the weekly chart at 30.92 is going to be the magnet that keeps the price there for a little while longer. So, okay, in the, let's see, just wanted to see questions. Okay, next question came in. Yes, so AT&T, Jeff says, stock gains on investor day, buybacks make shareholders the real winners. Okay, yeah. I mean, I'm really embarrassed about that, because I think we even had it for a brief moment. I said telephone's acting really well, and I didn't get in because of that fear, and that was stupid because the technicals are all very good. So it's just my mistake, and it gives a really nice dividend. Dumb mistake. LMT is destined to test the breakout 480. Okay, so I spoke about this yesterday as we were going to a break, so I'll repeat it. LMTs, look, Lockheed Martin made an all-time high in the just under 620. It's trading at 519 on the 200-period moving average. Lockheed Martin, I think it's very weak. I think it's going to be going down, probably test the 506 level. Then that's 505 is the 14-period moving average in the monthly chart. But isn't this great news? It says that maybe the Middle East is going together with gold pulling back and crude oil not skyrocketing, and General Dynamics off the high of 319 down at the 275 level, 277 right now. Raytheon, I mean, I like this. I want to see that these defense stocks are not doing well. Raytheon, defense sector, made a peak B in the monthly chart. That's still very positive, but a peak D doji candle in the weekly, and 128.70 peak D in the daily on the 22nd of October. And here it is, down at 100. This is good news. Hopefully this is the administration that has started the whole thing rolling, and the next administration will keep it up. We want to see peace in the Middle East, Ukraine. I don't know. We'll see what happens there. Okay, next question I had was, where did it go? Oh, CRM, Salesforce comes out with earnings. I think that Salesforce, so tiny writing. Am I right? Salesforce, I thought it had come out the other day. I'm not sure when Salesforce earnings come out. It made this double top 348 on the 12th of November, pulls back sharply down to the 319, 318 area, and it pops right back to 347 with a round number 345 open on the 21st of November. Now it's pulling back. This is the I'll talk about this rectangle formation and what you can expect. So that's Salesforce. Dow is down 114, S&P is down 12.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I thought I'd go through this. I had this already on my for my Traders Corner, for my positions that we have that I do every day for subscribers. We've had it once before and never got back in again. Evolve Technologies holding security for all venues, guns, knives, concealed weapons, bombs. Seems like the perfect company for now. And I followed it, and it was starting to really move nicely. It was down around about the 340s, and it went past the 200-period moving average EV/LV. And I had it today. It had made a peak D yesterday, and I had it today. I wanted to go. I thought the right area, and then I thought, I remember this gap. I can't remember why there was this huge gap going from the 413 area down to the 260s. And then I checked it out, and it was because they had to restate or they had to delay earnings report because there was internal theft. Or into whatever happened, they were robbed. But I thought, I don't want to go to a company that has to restate earnings. This is just not good. Even though it was in D. Why? Because it looked 453 was so enticing. I've drawn it in. Everything should be there. And today it's had a nice move. It's up 16 cents. And actually, I wouldn't have got it because yesterday it closed at 377. And I believe I said let's buy it at 365. And the low was only 390. It gapped up for the. So it did make. 390 is the low. Yeah, I would have missed it. And it's gone to this leg E. So sometimes you do your homework, you do everything, and then you just need that extra scrutiny. And that scrutiny could be the very thing that screws, not scrutiny, but screws you because it's already done. The way it's filled the gap, almost filled the gap, says whatever it did before, it's rectified it. So you never know. So I really haven't got this. And I just thought I'd mention a trade that hasn't gone wrong. It hasn't gone right. We just didn't do it. So with that said, we've added to our long position today in one of the indices. We're anticipating higher highs going this week. And then I think next week sometime, I think we've got to be careful. That's the way I'm looking at it right now. Don't have any signals that say be careful just yet. But we're getting close. All right, with that said, I'm handing over to Steve Rhodes, and I'll see you a little later on with